Mark, I'd love to know what you think of Summers' characterization of the UK economy. He says, since we've had Brexit, we've had fiscal policy, and monetary policy mistakes that seem to make the UK look like an emerging market. Do you agree?
Well, if we're going to start with, an economist in economic theory, let's start at the top and say what's going on in the UK probably proves that this modern monetary theory is hogwash and it doesn't work. Certainly, post-Brexit, I think you were doing a comparison with Italy. Italy's still part of the Euro and the European Union, but nobody really needs to invest in the UK. As a global investor, we don't need to invest in the UK. And you're seeing that play out in these markets. And the other thing we're seeing play out, as now we've gone away from negative rates and the tide has come out a little bit, we're seeing the way that this really starts to play out in currencies in particular, and that's going to be a real feature of the world ahead of us. So that's the macro. But then I'd say on the micro, when we aggregate up our stock exposure towards things like value, towards things like energy, we actually have a lot of stocks in the UK because, as you've said, the FTSE, the larger cap stocks, are getting much of their revenues from outside of the UK. And so that might be a place for UK investors to look to hide from some of this turmoil.